What's up, guys? Your agent Tyler Wayrung here, and today we're going to be doing something a little different. I'm going to be talking to you guys about my thoughts and my review and feedback on an investment I made with Brandon Turner. Now, if you don't know Brandon Turner, you've probably not been in the real estate space a whole long time. He is the host of the BiggerPockets podcast, has written multiple books for BiggerPockets. He's the founder of Open Door Capital, the company in which I actually invested with, that goes out and kind of syndicates money to buy mobile home parks, apartment communities, and self-storage space. He's a huge public figure in the real estate space and an influencer of mine. Helped me a ton get started, and I followed him for a really long time. So when I made this investment with his company, Open Door Capital, this is probably one of the most common questions I get from people who know that I did that. Is kind of, what's going on? What's the current status? How are things going? Is he legit? Is he really doing what he says he's doing? So I thought I'd shoot this review. We've actually just exited the investment I made. So I'm going to talk to you guys about all the details, kind of when I got paid back, how the communication was, what did the returns actually look like, the tax piece. I'm going to get all the nitty gritty as well. So I hope this is helpful, just to help answer a lot of questions, just because folks that heard he's selling will ask me like, hey, is it legit? What happened? So we're going to jump over here to the computer. I'll share my screen with you guys, walk you through everything. Drop any questions below that you have that I may not have touched on. And I apologize in advance for the clickbaity thumbnail. Hey, the channel's new and I got to try everything I can to get new followers. So with that, if this video helped you and you think somebody else might benefit as well, I'd appreciate a share or subscribe as always. And with that, let's dig in. All right, guys, so let's go ahead and jump right in. I'm going to start at the kind of end. So this is an email that I just got last week. I'm going to read it quickly, just to kind of cover the bases and give you where things ended up. So we got this email from Brandon himself, on behalf of Open Door Capital, that they sold. They've kind of been giving us hints for the last couple months that, hey, we have someone under contract. It's very early. And they're still doing due diligence, but that they said, all the numbers were so far ahead of projections that it's, in all of our best interest to go ahead and sell. So I'm going to read this quickly. Hey, Tyler, we're beyond excited to announce that have now successfully exited Fund 1 and projecting a 35% plus IRR for our limited partners. So all of us that did invest were on the LP side. It was bittersweet to sell these parks, but we were so far ahead of our business plan, we had to consider it, giving the potential returns for our investors 2x our original projections. None of this would have been possible without the faith and support of our early investors, so we appreciate you investing this. Timing, final distributions. So this kind of just, I won't get into the details here. Basically, it's saying, you're going to get your preferred return that you would have gotten prorated, and then the capital investment, the original investment that you made. And then you'll receive, a little bit, they're holding a little bit back for taxes and some other various things to roll out. So, and I thought this was cool. He said, what do you do with the money? Hey, we actually have another fund getting ready to come out, and they're giving us the opportunity to jump in before they're opening up to the public. So I thought that was cool. We kind of have an inside feel to kind of roll this capital into the next investment, which, like I mentioned in the intro, I'm actually planning to do because this one went so well. So let's jump over now to kind of the inside, communication panel. Like, this is where you go when you had any questions. This is where you submitted your funds, where you can track how your investment's doing. If you have questions, you can reach out to the team. So this is one positive that I wanted to call out, just this communication forum. You have a site you can go to check into everything. That I know some other folks who have been on limited partnership sides, and you're kind of waiting for an email. Everything is like Excel documents. So this one was super cool. So we can jump in to see what offerings are currently out there, which ones have closed, investments. All right, so this is where you kind of track how your investments go. Now, before they returned everything to us, this was very easy to follow, but now it's so small of distributions you can't really tell. So let's jump down into So mine was Fund 1, so this was Brandon's first ever fund that he put together. So this is kind of a timeline of what those events look like. So in September 2019, I invested $50,000, which was the minimum investment. And then we didn't start to get dividends on that return until the end of Q1 in 2020. So I'll touch on something else related to that here in just a second. But this was they kind of pulled all the capital together. It took them, some time to get these funds these parks under contract. And then once they started to operate them is when we got our preferred returns. So those started in Q2 of 2020 and were consistently hit all the way out through Q2 of 2021. So those were $1,000 on a $50,000 investment once a quarter. So $333 a month is essentially how I looked at it. And then you can see here they did sell on 1019. So we got our prorated preferred return here. Then this is the original 50 that they gave us back, and then so here is actually the profits, if you will, along with the other distributions. It was 23,849. So basically, put 50 in, and now we, in all the returns so far, we've got 80.6. So roughly $30,641, and then plus that 9% that they're holding back that they said will be distributed at a later date. So per his, original email here, I won't do the math. I kind of trust that it worked out. 35% IRR. So for those not familiar, that's a per year investment is how IRR looks at things. So definitely not mad about this at all. I guess if I had to give it one negative, I would say that IRR is a per year, so obviously the longer you're in, the more that money just keeps rolling over. So for that reason, I'd wish they would have kept it a little bit longer. But hey, if we can get it back and roll it into something else, that's awesome. So here's something I completely didn't even consider, but was a huge benefit to me for making these investments. So for those who do invest in syndications, this was probably obvious to you. But I was not aware of the tax implications and how big of an impact those would have. So like I mentioned before, we invested in 2019, but didn't get our first preferred return until 2020. But what we did get in 2019 was they did do a cost segregation study on one of the parks, and we were able to write off, if you invested $50,000, you got to write off actually just over $5,000, the total of those two together. So yeah, it turned out to be $53.86 that we got to write off for just investing in like the last quarter of the year. This is actually very helpful. It took me from barely having to owe some to actually getting money back that year. And like I said, this was just for investing at the very last quarter of the year. So 2019, that was kind of cool. But then in 2020, I was a little blown away when I saw this one. So a cost segregation study on the other two parks resulted in a net rental loss of just over $41,000. So, hey, Zillow. Yeah, so like we invested 50 and got to write off 5 the first year and then 41 the second year. So it kind of takes our initial capital, beginning capital count almost down into the negative. So we pretty much wrote off all that money, which in 2020 I really needed this. So it was super helpful to get that, and for that reason is one of the reasons I'll continue to roll this money into future investments with them, just with the style they're able to get those cost segregations and doing other real estate activities that are taxed in a higher bracket, such as flipping, wholesaling, and things like that. This is a huge help to offset those profits. So this was super, I was super happy with this investment overall. And like I said, it was fund one. I feel like I rolled the dice a little bit, but I have been following Brandon for a long time, just kind of trusted, just the person he is, what he stands for. And actually, I just knew that he had a lot to lose, so he wouldn't,
take this lightly. Put together an all-star team who I vetted as well, and had a super positive interaction anytime I reached out to that team. So this was my first limited partnership, and I really just wanted to kind of understand, how it all worked. How do you get updates? How do you track, how your investment's doing? And they did an excellent job. I think blew all my expectations out of the water. So super happy with this one. And again, apologize for the clickbaity thumbnail before, but hopefully this is an expose on the positive side. And like I said, the channel needs all the help it can get. So Brandon, I apologize in advance if you are watching this. So,
all right, guys. So I hope that was helpful to kind of give you the ins and outs, all the details behind the scenes, to really show, how this investment worked out, and that, my opinion, Brandon's the real deal. I plan on rolling this money into his next investment, and everything, all the good things they have going on there, I'm kind of bought in. And yeah, so if you guys have any other questions that I didn't answer, drop them below. Hope this was helpful, guys. Let me know if you want to see other videos like this on specific investments that I made and all the ins and outs that go along with that. But with that, we'll go ahead and wrap. I'm Tyler Wayrung. We'll catch you next.